All right. Sounds good, my guy. All right, everybody. Welcome back to Cashflow Chronicles. We are back again with me and Chris Patel. Today is January 18th, 2024. Pretty good day in the markets. I didn't expect it to turn out this well. Personally, I thought that markets are going to have a down day. And next thing you know, Apple's having up a 3% day. Google's kind of holding in flat. Yeah, everything kind of started to do a little bit of a rally. Any thoughts as to why that might be, Mr. Patel?
TSMC, man. TSMC, large producer of advanced chips. They had a really great quarter. So a lot of people are saying, oh, you know what? Maybe there's still a lot of demand out there for AI chips and AI services and AI everything. And so the main leaders, they ended up doing well today. The only thing I'd say is we've got to be a little bit cautious. I know a lot of times the optimism can be a little bit jarring, but this is where really, if you just stick to the higher quality names, you should be fine. Don't go speculating on things. Like one of them is, of course, the Bitcoin miners and
Oh man.
the Bitcoin ETF folk. They're getting creamed right now, primarily because this is what happens, man. You get so much optimism behind certain businesses and things just ride up, and then you have this sense of FOMO that comes over people, and people buy at the top, and then now you're going to underperform for a while until things get back to normal again. And
yeah, I mean, I was looking at this because I was just like, oh, because I know this is a big one, and I'm not calling them out. Everyone has their own plays that they like, but I know that Jesse and TJ really liked HUD 8, and I don't know if they traded out of it or not, or what, if they took their profits. So I don't want to speak on their behalf, but I was like, okay, well, like I'm noticing this trend of it being down below kind of where it has been over the past year. And so I'm like, okay, or heading towards where it was over the past year, rather. And I'm like, all right, well, let me see. Like, does this thing actually make any money, or is it actually? And I look, and the financials just are not there, right? So I'm just like, it'd be one thing if the company is actually making a little bit of cash or something like that. Because I was like, well, it's down so much. If Bitcoin does turn around, is this an opportunity? And I'm just like, I looked at the stock and the profitability of it. I was just like, I'm not touching this thing with a 10-foot pole. I mean, unless you have some sort of momentum, it just didn't make any sense. So I still, unless I find some sort of very profitable miner, I'm going to stay very far away from these things.
Yeah, just the business models are very tough. Like you have these cycles of a lot of demand and a lot of hype, and then things just kind of die down. So I'm cool. I like I said, this is one of those sectors that I can't value it. I don't know how to value it. So I stay away. That's like the first rule of investing. If you don't know the value proposition of the business that you're buying, then don't buy it. So
that's good feedback. Yeah. I think this happened a lot. Like this sort of craze happened to me a lot in the late 2020, 2021 timeframe, because literally anywhere you put money in the stock market, it'd be making money. So, you kind of started to get a little bit dumb with respect to thinking about it. And so when you start having some retracements like this, it's very similar to what I observed in January, February timeframe of 2021, where everyone was like, I don't understand why the market's going down. Granted, this is more, I guess, around Bitcoin in particular and the miners, but I'm not going to be surprised that within the next 2 to 3 months, if we see a lot of other companies that are not profitable.
Hey, let me get this call, right? I'll talk to you in a bit.
Yeah, no, you're good. But yeah, the only other thing that I wanted to bring up, and I know Amit had mentioned this one on his morning call for the market open, was the Google layoffs that are unfortunately happening. And I want to say personally, it's something that makes me pretty bullish about the company, because it makes it known to me, this is something that has done well at the likes of, say, Amazon, and has done well at the likes of other companies as well. And it's not necessarily because you're reducing headcount per se, but it is more so because you're focusing on efficiencies within the organization and refocusing on what actually matters with respect to the company and what's actually driving growth. So let's just take a quick opportunity to look at this, and we'll regroup after.
More layoffs at Google.
The heck? My poor?
More layoffs at Google. This time, CEO Sundar Pichai reportedly cutting 100 employees at YouTube, and he warns more.
Hey, dude, I'm sorry to interrupt. I have to go. Like I said,
You're
I'm
good,
taking
Micah.
I gotta take the wife to the ER. So I'll talk to you later.
All right. Good luck, man. Jesus.
Later. Bye.
All right. Well, hope everything works out with that.
Hey, Leslie. Good morning.
Say a prayer for Chris's wife. Geez, I'll check in with him later, make sure everything's okay. That's scary. All right, everybody, back to the show.
Google was criticized for moving too slowly during the year of efficiency, but this year, no mega cap is cutting as much and as quickly. Units affected, they also include hardware, engineering, ad sales. So far, last night, CEO Sundar Pichai told his workforce to expect more cuts. Yet, Wall Street's response.
Man, my poor, what's going on here? The show's ending in shambles. Heck. All right, well, let me try to refresh this really quick.
Recordings
Sorry,
just got better.
So yeah, everyone, just if you have a moment to just think about Chris's wife and keep her in your thoughts, that'd be nice, because that was that's a little scary, man. I love Chris, and I hope everything's okay over there. I don't want that bad to happen to anybody. So all right, back to this. Maybe not. Maybe I'm poor. I think I'm poor, and the internet just doesn't love me today. So I don't know what's going on with this. Huh. All right. Well, gist is of this particularly is the fact that Google's laying off more people. They're focusing and getting rid of some of their non-competitive sort of folks. They're doing layoffs in YouTube. They're doing layoffs in other parts of the business. And I think that's just overall good for the company, just to make sure that they're focusing on the right things, focusing on efficiency. And one of the things that makes me bullish is Amazon did something very similar. Not to say that Google is lagging, but you can see specifically if you look at the trends of Google's cash flow and everything the like. Is it on a? Can I do it on a quarterly basis? Financials. Generally speaking, it is not too rough. But net income, gross profit, margins. So I thought they had free cash flow in here. Let's just look at operating income. So yeah, Google has done a pretty decent job about getting back to a good place with profitability. And so you can kind of see this is down here is the dates. You can start to see they've started to kick back again in terms of growing on a quarterly basis. So last quarter you were up 12, 13%. This past quarter, 3Q versus 3Q of 2022, you were up about 25% comparatively to the year ago quarter. So it looks pretty good. Oh, sorry, this is quarter over quarter. So this is sequential growth here. So but you did see like this, and the part that was kind of scary is, and this is why I think Google is really starting to hit home and do these trims, is massive growth with respect to the net income of Google over the past 2 to 3 years. And really what ended up happening is they just started inflating their employee count. So if you look specifically at number of employees, it's just been like a massive skyrocket over the past few years. So this is annual growth. So from 2019 to 2020, it was a 14% increase, a 16% increase in 2021, a 22% increase in 2022. And I anticipate still that you would see something very similar in the 2023 timeframe. And so with that, I mean, you just have this massive ballooning of employee count, and it's doubled really over the past 5 years. And so if that's the case, I recognize that, you know, with a larger revenue base and with a larger net income that's coming from the organization, you'll need to hire more employees to manage those things. But these things are software, right? I mean, it's not like to me, the way I recognize it is you might need more servers or you might need other things that keep something up and running. But YouTube is YouTube, right? There's no additional functionalities that have kind of come in through YouTube other than maybe monitoring or something like that to ensure that there's no, I guess, bad or dangerous videos appearing on YouTube. But other than that, like there's no real big functionalities that have happened on YouTube that would warrant having, say, a 20, 50, 100% growth in terms of the employee count. So to me, it gives me a little bit of a head scratcher as to why so many employees have kind of been hired. But that's just me personally. Um, so with that, I think that you're going to end up having a moment here where the cash flow from operations continues to expand at Google. You're going to see a lot of opportunities when it comes to just margin increase overall. And I think that there's just a huge focus on too many different things at Google. So just getting rid of some and shedding some of the things that may not have been important at the past. The problem that I see with sometimes with some of these things is I don't want it to be too extreme. And what I mean by too extreme is like, yes, efficiencies in your main mature businesses where your cash cows are is important. But the thing that I think drives long-term growth, over the course of 5, 10, 20 years is innovation within the organization. And so it's hard to decide when you do exercises like this, what is truly something that is dead and, dead in the water, not actually going to grow or amount to anything. And then what is actually going to be able to accumulate into something that ends up being the next search for Google, right? And that's what I kind of scratch my head at, and try to understand is like because things like the driverless car, and all these other businesses within Google, it feels like to me that sometimes they ramp some of these things down a little bit too early. And then there's like the hot air balloons that were trying to do internet and provide that to remote areas. I think that alone was probably one that could go away because you have competitors like Starlink and many other competitors that will likely win that space. And so it's hard in that respect to, compete against something like that. So anyway, just some food for thought with respect to but with that, I was gonna try to go back and forth, and Chris had a little bit of thoughts with respect to why inflation is really causing some issues with respect to what we're seeing, some rewriting of inflation. And one of the things that I actually wanted to highlight as well is the actual bond markets that are causing kind of a little bit of an increase, which I think was putting pressure on stocks. Now, of course, I think with that the rally that we saw today, it might have come back a little bit. But let's just check out like the last month or so of bonds, and you'll probably be able to see why the market has kind of done a retracement, just a little bit. Now, of course, today is kind of an anomaly because of what happened with tech, but today is an exception to that. But if you guys kind of recall, everything was kind of high, and we've kind of been flat since the beginning of the year, other than today. And the reason why is you've kind of hit this inflection point where I think people started to recognize, and this is the 10-year treasury for those of you who are kind of curious, for those that are starting to understand and recognize, March is probably off the table for a rate cut. You have a lot of people in Davos saying that. You have Jamie Dimon saying that. You have many people saying that. You have David Solomon at Goldman Sachs stating 6 or 7 rate hikes. Who the hell was drinking the Kool-Aid there? And so you have these pendulum swings, right? I mean, it happens all the time, right? Where you get bullish, then you get bearish. I mean, if you think about it, what happened in June, July timeframe, everyone was kind of excited. And the next thing you know, rates kept going up, 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 up because people didn't necessarily know. There was the uncertainty. And then once it kind of came to a head, okay, we're getting closer and closer. We think it might be March. This whole the past 3 months has been, we're going to have a March cut. We're going to have a March cut. We're going to have a March cut. And that's when you started to see things go from 5% on the 10-year, and they were definitely over 5% on the 20, and really started to come down by over 100 basis points. And that's pretty extreme to happen within the amount of time that we did. So we saw that come back with respect to the share price within the S&P 500, the Nasdaq 100 still at all-time highs. And now I think people have started to backtrack a little bit to the point where you've seen about a 20 to 30% basis point hike back in. And that's what's caused the uncertainty piece of what's kind of going on, and the S&P 500 kind of wavering a little bit. And instead of it continuing to go on this meteoric run as it has since the end of October timeframe, it's kind of floundered a little bit and it's looking for its footing. So I'm kind of curious to see where we go from here, because we do have a lot of earnings that happen between now and the FOMC meeting at the end of the year. Sorry, end of the month on the 30th and 31st. And so I feel like you'll have this. You have two ways this can continue to go, in my opinion. You kind of have this floundering continue. A lot of people probably being a little bit cautious, more layoffs, etc., which might keep a little bit of unease in the markets. And then you have the FOMC meeting at the end of the month, which would guaranteed take a rate hike off the table for March, in my opinion. But I think the dovishness or the hawkishness of what Jerome Powell says at the end of the month is really going to drive the next 2 months worth of the market. And if he comes in extremely hawkish about, 2% means 2%, and we have to stay higher for longer, and it kind of guarantees a push to like the June or, third quarter time frame before any sort of rate hikes, I think you're definitely going to see another 5 to 10% pullback from where we are today. And I think that just, is just the lay of the land, right? That at the time right now, the market, in my opinion, is still pricing in a good 5 or 6 cuts this year. And I personally am just not at the belief that that is the case. And if anything, I've learned from what has kind of gone on over the past, let's say, 2 years, is that I was completely wrong when interest rates were rising, and I'd never been in an environment that raises like that before. So I was completely wrong. So I'm comfortable stating that. And what I'll probably recognize, which is making me more cautious, is that we're likely to be in an environment where we cut slower than we're used to. And I think at the time right now, people are still obsessed with this like 2 to 3% range of, the FOMC federal funds rate. And to me, I just think like high threes, low fours is where we're going to be in like 18 months or so. So I could see 100 basis points cut within, the next 12 months, but it's going to take quite some time, right? It's going to me, not happen in 50 basis point cuts. To me, I think that the Fed has done all this work to be cautious, mean higher for longer, meaning 2% is 2%, and to just come out of the gate and cut 50 basis points, I think reduces a lot of that hard work that they had put in. And so to me, it just takes a little bit of time to get it to where it needs to be, before you really get into the easing of these things. And I'm very curious because I haven't been alive personally where they've been able to ride a line of say 2% inflation. It's always been like zero interest rate policies, and has always kind of been like 2% flat or between 1.5% to 2.5%. And so I'm very curious as to what actually ends up happening in that regard. So cool. Well, I will take an opportunity to hang out and read some comments and answer any questions that you guys might have. And hopefully we can have a great conversation. And so I'm down to hang out for 10 minutes. I'm down to hang out for another hour. It all just really depends on the question that you guys ask. But yeah, I'll hand it over to you guys to ask any sort of questions. But once again, Chris had to leave a little early. Something is going on, and he had to take his wife to the hospital. So hopefully everything is okay there, and keep him and your family in his thoughts, and make sure to reach out to him and double check that you let him know that he's in your thoughts. I'm sure that would mean a lot to him. Carol, what's going on? Hope you are having a great day. Hope you're having a great day in the markets. I think the internet's better now. I paid my bill. They definitely took the money out of my account, um, which I just checked literally the other day. But because I always take bills out on the 15th or the last day of the month, because that's when I get paid. Tommy hates me. I never understand when he's joking or not, but that's just the lay of the land. Dean Pierce, part of the Money Gang. COVID and AR making companies very efficient. I'm excited for the future. Yes and no. I think you're going to see a lot of profitability coming from this, but at the same time, you're going to see a lot of layoffs. So, what are all these people going to do? I don't know. But I think Chris hit something on the head. Like, I think you're going to see a lot of deflation in things, right? If you don't have to pay people $15 an hour minimum wage, well, guess what? If you have to pay a robot and that robot costs you 5-10 grand to be able to do the same amount of work, well, guess what? You're going to be able to decrease the price, and it's going to be very competitive out there. And I'm sure deflation will set in some cases. Ren, yeah, Chris had to run a little bit. TJ, hope you're doing well, my guy. I saw your video and stream yesterday with Steven. Steven's a great friend of both channels. And hope you're doing well, my friend. I love working. I'm kind of upset, my guy, because normally on Fridays I get to work from home, or at least I don't like working from home. I get stir crazy, and so on Fridays I kind of just take a little bit lax, and that's my day to work from home. I'm supposed to be in the office 3 days a week, and I have the opportunity to work home 2 days a week. But I just like to go in on Mondays. Nobody's there. I get to knock out my work for the majority of the week. And then Tuesday through Thursday, I can do a lot of coaching and stuff like that. And that's kind of been like a good feel for me. And then on Fridays, I can take care of some emails, be a little bit more. But on Fridays, I love watching TJ. Like, it's my day to catch up. And unfortunately, I just won't be able to do that. So shout out to TJ. If you guys don't follow him and you're looking more towards understanding how to generate a little bit more income, do a little bit more of the options play, how to do more a little bit of managing long-term money. He does things a little bit differently than me and Chris. He's more on the options side, cover calls, cash secured puts, and I do cover calls as well. But TJ does things way closer to the money, and it could be something that works for you. It could not be something that works for you. All I ask of you guys is just to understand whether or not that fits into your strategy or not before you take on a completely different investment style that may or may not fit into your wheelhouse. So Dean says, I think there's a majority of the Mag 7 that are doing fine right now. Slight consolidation out of spec plays. I agree. I am fearful for the people in the companies that invest in. I'm fearful for the people that have invested in companies that are still not profitable during this time, because you have markets at all-time highs. And I think right now people are being very cautious about what they put their feet into, and they're looking for good plays. So you might get lucky. You might be investing in a zombie company that gets brought up with the rest of the small caps or the Russell 2000, etc. But I think people are being very picky. They're recognizing, hey, we're still not out of the woods yet. Interest rates are still high. If these companies are profitable, be involved in them. Even if they have a little bit of debt, but they're still profitable, might be a good opportunity to buy them. I think you have an opportunity to buy companies like NextEra, other companies like Orsted is one that I'm really long on, and I bought in the 13s, and so I'm doing really well with that. We bought that in the public account as well, so I'm sure you guys have seen that. And I also wrote an article at Seeking Alpha about it. So if you guys are curious, be sure to check that out. But I think there's a lot of companies, and I mentioned HUD 8 earlier, that are historically not profitable. And yes, while Bitcoin is going up, it's been a trend to buy it. But in times like this, where it's literally skyrocketing down, like, maybe it makes sense to buy it back again in the $3 to $4 range. But at $7, there's still so much risk associated with it. To me, shout out to the people that are making money on it and being cautious, but it's just risky to me. And I'm going to personally stay very, very far away from it, but I wish everybody the best. Hot TJ said he bought another 500 shares of Google today. I agree with that. Long term, I think it's going to be a really good one. And hopefully that continues to be a great play for the long term. I have 380 shares, so I'm not TJ money, but I think it's 380. It's either 360 or 380. I always mix up how many shares of Amazon I have and how many shares of Google I have. Both of them, one of them is 380, one of them is 360, but I always mix it up. But I read covered calls on it. I actually have some February covered calls on Google, I think. Let me check. And I might have to not roll them, but I think I might roll them out just to get a little bit more theta decay. So I might roll those out to March timeframe if I'm already up a good bit. Because I think, let me check here. Sorry, it's logging into my account. I have my internet is slow. I think I am. I have the 165 February calls that I'm up 20% on. So I thought I'd be up a little bit more. But I think it's because the stock price has been rather elevated, if not gone up a little bit. So even though some theta decay has been in there, so I might roll these bad boys out to March and get a little bit more theta decay because I have a 41-cent cost basis on them and they're sitting at 33 cents. So I've made a little bit of money in terms of theta, but it might be a good opportunity to roll them out and get a little bit more conservative or a little bit more bullish on the strike price, get a little bit more premium out of it. But I don't want to get too crazy because I know earnings are right around the corner for this bad boy as well. So I guess that's in the February notes as well. Let's just see. Stream keeps buffering. Let me know. I'll be scrolling down to see if it's in there. I personally don't think. I think that you'll see a spike up. This is just me, so I could be 100% wrong. I think you're going to see more of a spike up at the end of January when the FOMC conversation happens. When they push out the interest rate cuts, I think until the May-June timeframe. And if that's the case, I think you'll see a large spike up personally. I could be 100% wrong with this, so take it as you see fit. Just how I'm reading the macroeconomic trend and the tea leaves, I'm fairly confident that that will be the case. And we'll end up having to have a little bit more interest rate rises on the 10-year, 20-year. And with that, you'll see TLT continue to kind of come down. And once TLT, I think, comes down after a week or two after that, maybe a month, it might take till the end of February, there might be an opportunity to get back into TLT. Sorry, not TLT. Once the 20-year Treasury yield goes up throughout February timeframe, then and only then it might be prudent. And I would say Chris and I played, although I didn't play with a lot. I think that we played it okay. I think we got in. Let me just double check. I'm not sharing that screen. Am I sharing the right screen? Okay, I'm sharing the right screen. Just don't want to count numbers and stuff getting out of hand. So you're down 5% on the year, 13% over the past year on TLT, 5% the last month, but you're still up over the past 3 months for TLT. So I remember at the end of like October, early November timeframe, Chris and I purchased, and then we sold at like 96 or something like that. So like early December. And then it continued to run. It actually peaked out at over 100. So congrats to the folks that held on to it another 5% on like Chris and I. But I was always kind of confident that it would be somewhat short-lived. But I think for those of you guys that are holding it right now, I wouldn't say, for the folks that got into it and have a decent price basis, I could say it could be an opportunity to potentially buy a little bit more, wait another month, see where it ends up in the February timeframe. But I'm confident that once we start cutting rates, this will do really, really well. And so I'm just kind of getting a little bit of internal confidence right now about understanding, is this going to be a May cut, a June cut, later in the summer cut? Because if that's the case and they come out and they say, we need a little bit longer, a couple quarters, whatever, and they start signaling to late summer, then the yield on this thing was going to go to the moon. If the yield goes up, I could see this going back to the mid 80s. And that would be the entry price. So this one will be an interesting one to play throughout the year, and I'll be sure to keep people in the loop. So Andrew says, TJ, why aren't you selling Google puts instead and he just wanted the shares and get to 1,500 total. And he sold the calls, which is a good play. I'm curious to see what Hot TJ sold those calls at. June, what's going on? A great supporter of the channel as always. Congratulations on your continued success. Do you know if Bros has any branches in Maryland? They do not. So let's take this opportunity. Let me just make sure am I going to exit out of anything? If I exit this, cool. Let me show you guys where Bros has locations. The Dutch Bros, and oh my God, I went to Dutch Bros. I know some people don't like their drinks, and I would say, just because it's Bros doesn't mean that every drink is going to be good, right? You have to be cautious about what exactly you're into, and just be sure. How do I shrink this side? I don't really give a shit about this side. More so curious. So that's Houston. The blue means that they're newly opening stores. They're not open as of yet. So let's just take a zoom out. Let me just make sure I'm sharing. Okay, cool. Oh wow, I did not want to do that. How do I get that back to normal? Okay, so this is the United States. Why is it doing this? It's fucking weird. Here's the United States. You can see the Western Seaboard very much occupied, much along certain highway systems. Keep in mind, the reason why it looks like this is that there's only one roastery for the entire organization in Oregon for all 600, 700 now kind of non-franchise company-owned stores. So you can see all the white stores are open already. These are franchise stores. These are company-owned stores. They've been opened. These blue ones are newly opened stores. So they're still opening up in California. They're still opening up a lot within Texas as well. And they actually are starting to just open up their first in Casper, Wyoming. It's not even on here yet because they probably haven't started building it, but or Cheyenne, Wyoming, not Casper. They are opening 2 stores in Florida. So those were announced, I think, like 6 months to a year ago, and they're finally starting to show up. About 2 months ago, they weren't even on here as showing up as upcoming stores. And they're starting to expand a good bit in Tennessee area, and they're starting to get into Huntsville, Alabama, and they're starting to get into Kentucky as well. So no stores in Maryland. I anticipate my thought process here is these Texas Fort Worth area, they're going to open up a second roastery. And I think that's going to help fuel the run for Dutch Bros east of the Mississippi. All because, obviously, if you think about this, Dutch Bros does a good job making sure that they lock in coffee prices and stuff like that. But all of that coffee is being roasted in Oregon, and then they have to transport it all the way across the United States, even the Texas stores. So once you get this $25 million roastery building open in Dallas-Fort Worth, you literally cut all of that space in half for all the Eastern Seaboard sort of openings, and that helps out a little bit. And I anticipate within probably the next 2 to 3 years, if not sooner, they might take some of the cash flow and open up another roastery somewhere on this Eastern Seaboard and help out with that, because there's not a lot of, in this mid-US area, there's not a lot of volume that they might do. And so this could help distribute to, say, Arizona, New Mexico area if you're in Texas, or on the South area. But even still, it's a 10-hour, 13-hour drive to get to Jacksonville from here. So, meaning Houston. So if that's the case, I mean, you probably would open something up on maybe the Northeast here, somewhere in Pennsylvania, New Jersey, something like that. So I would say within the next 2 to 3 years, you would start to see stores opening up on the East Coast. And I think a lot of that will start with Florida. I anticipate, just like how they've been dominating in Texas over the past 3 to 4 years, once they start opening up stores in Florida, Florida's a pretty populous state. You have a lot of cities nearby each other, big cities at that. And so I anticipate you'll get a lot of a lot of movement in Florida going forward. What's my favorite vacation spot? Well, I don't know. Everywhere is different, even the Caribbean. So I've mostly vacationed in the Caribbean. I lived in Trinidad and Tobago for years. I helped support the government there, create some natural gas for export because that's their main source of income. Trinidad's very rich in natural resources, oil as well, and they help supply oil during World War One, World War Two, and they have a small population, about 1.5 million people, and so they have way more natural gas than they know what to do with, and so they also border Venezuela. So a lot of natural resources. You guys recognize Venezuela also has a lot of natural resources. So I lived there for a year. While I was there, I was able to travel to a lot of Caribbean countries just for vacation, quick jump and flight away. And then I would also, if I were to go home to visit people before the pandemic happened, I had a wedding or two, and then another just vacation for Christmas where I was able to go visit family. And then on my way back, I was like jumping islands to get back to Trinidad. And all of them are very different, man. Some of them are a little bit more touristy. Some of them are a little bit more laid back. I liked Jamaica. I would like to see a little bit more off the resort for Jamaica. I'd like to get a little bit more lost. Trinidad was good. Grenada, I think, might have been my favorite because it's so laid back. Yes, they have the opportunity to do the touristy thing, but also it's mostly just like local life. I really liked Antigua as well. That was very non-touristy. And so there's a lot of cool places. I've been to Germany. I haven't done much of Europe. That's some place I would love to do. There's opportunities potentially for me to go and work in the Middle East, which I might take up if the right opportunity arises. And that would probably open up a lot of vacation on the Eastern hemisphere that I have yet to take, but I really want to. So we'll see what ends up happening with that. Like I said, it wouldn't just be for any job, but it would have to be the right job and the right country, of course, as well. So a lot of great people in the Middle East. I work with a lot of people from Iran. I work with a lot of people from Azerbaijan. So the Persian people are so nice. I love working with those guys. So what do you think about Amazon buying in Bally Sports? I don't know anything about it, to be honest with you. I'd have to do my due diligence, but I think it's opportunistic. I think it gives them an opportunity to, if I remember Bally Sports, I think I had a Bally Sports in the mall growing up. I think it gives an opportunity to have a little bit more of a warehouse play within the malls. So best YOLO stock for me right now. I like Rocket Lab. If you're looking for a little bit of risk avergence, Rocket Lab has a lot of risk. Don't get me wrong, but I think Rocket Lab is a good one. Personally, yeah, it's a $2.5 billion company, but I could see a world where this gets to a $100 billion company. And so if that's the case, you're looking at a 40x from here. And I see it, right? It's not like you have to wait to see if it's going to happen, right? I think you're going to be able to know whether or not it's actually going to hit that 100 billion within the next 4 to 5 years. Accelera, other companies like that, they still have a little bit more hair on them. They're a little bit more, who knows what happens, right? So yeah, there's Accelera could end up being a $200 billion company, but who's to say if it actually survives? We'll see. They got like 10 drugs in the pipeline with respect to that. But I would say most people, man, should just put their money in the SPY. Like I have money to lose, right? Like I have, if I were to lose all my Palantir, lose all my Rocket Lab, lose all my Bitcoin, lose all that other stuff, I still have a very, very solid 401k. I have a very solid S&P 500 position outside of my 401k. So, like the Google move, TJ, I've been learning on your channel about options, but I haven't pulled the trigger as of yet. Hey, man, it really just depends. Like, I think I talk about this a lot, and I think a lot of people just like goes over their head, but it's honestly true. Is you really have to understand. It's like learning the stock market all over again. Options, like, because if you think about it, it's a derivative, right? If you did do well in calculus, like, no offense, I know it's not that deep, but it's like learning math in a completely different way, right? So if anybody that knows calculus or done anything like that, you know that there's like your normal arithmetic and then there's calculus. Yes, it's both still math, but you have to think completely differently. And it's the same sort of way when you're thinking about options, because it's not just the stock market, it's not just stocks ups and downs. Price of the thing goes up, thing that goes down, but it's a derivative of the stock price. And so there's so many different avenues in which you can utilize that, whether it's for leverage, income, hedging, all that protection, there's so many different ways you can use it that, you might get lost. And so without understanding fully why a person's buying into it, you might get lost and end up losing money. And that's the thing that kind of scares me a little bit, especially if people don't have the time to dedicate. I see a lot of people always just being like, I need that one stock, right? And I've seen people, like, to me, I diversify a lot into my speculative investments, and I'll have people that be like, "Hey man, I listened to your video and I put like 60 grand in X, Y, and Z." And like, I don't even have 60 grand in X, Y, and Z. And that 60 grand is all you have. So it's like, I see people do silly stuff all the time. So some thoughts with respect to that. Just be cautious. And if you don't have the time to manage the options, it might just be better for you to just focus specifically on the S&P 500. Just recognize where your time is best spent, right? Focus on that. Not to say that you don't know, Laura. I know you put a lot of due diligence into watching videos and getting educated, but that's just more so for everybody kind of out there. And Rob, I think, hits a really good point here. Like, do it in small amounts when you're first learning, or a paper account, because the price might stay flat, but next thing you know, like the stock price itself, the underlying stock price might stay flat, but next thing you know, because the whole market's going haywire, implied volatility goes up, and next thing you know, you're losing money because you sold an option, and it is what it is. So what do you think of QQQM and IWM as a combo? I like QQQM. I would, if it was me and I were in QQQM, I would probably buy the Qs, like just no M, just QQQ, because I would be able to write covered calls on it. But QQQM, for those that are not covered call writers and they're more just like buy and hold, QQQM would be slightly better preferred because it's got a slightly lower expense ratio. I would love the expense ratio on QQQM to come down a little bit more, to be honest with you, but it is what it is. And then IWM, I think that's the Russell 2000. That I would say is okay. The problem with the Russell, which I've started to realize, is like, you might get in a place where it overperforms, but in terms of volatility, there's going to be years where it massively underperforms the S&P, but there's going to be years where it overperforms the S&P. The thing that's nice about the S&P is that it's a built-in mutual fund, actively managed, basically. And I know it's not technically a mutual fund, it's an index fund, but hear me out. There's literally a council of people that are making sure that the companies that go into the S&P 500 are profitable. They have been profitable over the last 12 months. And even if they are, they still have to be elected in. So you have companies like Palantir that have been profitable for the last 12 months and are eligible to be in the S&P 500, but they're not. And so it even took Tesla forever to get involved in the S&P 500. And at that point, it entered like within the top 10 or whatever. But you have to think, like, to me, and depending on what kind of goals you're going after for your portfolio, would you rather be in something that's a little bit more slow and steady wins a race, or something that's a little bit more cyclical? And I think for right now, QQQs might be good because we're in this AI revolution, but it could be 4 or 5 years down the road, after AI is kind of taken hold and everything the like, that there's a little bit of a pause. And I think the Russell 2000 will do well right now because of cutting interest rates over the next 6 to 12 months. But after that happens, I still think that there's going to be companies in there that are zombie companies, don't actually make any money. You might get caught with your pants down. And so that'll actually drag on some of these companies. So it's like, to me, what I can guarantee is that the companies that are in the S&P 500 are going to be profitable. And so to me, I would be okay losing a little bit of money in the short term, acknowledging that in the long term, I'll probably end up making more money. Um, because I think with the world these days, there's so many companies. Like I feel like there used to be companies, yes, but that weren't profitable that would be in the stock market. But I think it's more prevalent than ever of like all these technology companies and speculative companies that are out there now. Because it's so available and there's so much flush money out there. Maybe not as much as there was in 2020, 2021. So I would just be cautious a little bit and understand, take a step back, understand what your objectives are, and take that opportunity. I don't know who gave the super chat, but I see a $5 super chat in there. Much appreciated. I'll be scrolling down and seeing that in just a moment. So I just want to say thank you for that. Hot TJ said it took him 4 years to find his groove selling options. 100%. 1,500 Amazon and Google. Tired of mixing them up as well. Lunar Excursions. TJ, did you get assigned some Palantir? I'm curious about that one as well. So I'm curious as we scroll down. If quantum computing becomes a reality, Bitcoin will be worthless. I disagree, but we will find out with that. I'm bullish on Bitcoin, but this is not Bitcoin Daily. So how TJ rolled his Palantir puts, so not get assigned. Hot TJ, I'm sad if you are doing any live streams. I won't be available for that. Yeah, Davos talking, or Carp talking at Davos. Earnings are going to be good, real good. Hey, I just recognize this personally, like within my own life. It's like I hear the people talking like this corporate talk, and it's like, dude, just like be real sometimes, like so many egos sometimes with this stuff. Let's get the likes up. I would love that. Any of you guys haven't yet, please be sure. Oh, I'm still sharing Dutch Bros. I'm sorry. If you guys haven't yet, be sure to check out Cashflow Chronicles TV. The replay for this will be available over there. So let me just poke this here in the chat box. So you guys can go over there and take a quick look and subscribe. That's where this replay will eventually be, and that's where our backlog is for Cashflow Chronicles. Always a huge line of cars every time I drive by Dutch Bros in Colorado over Christmas. I live in California, but there are no bros in Silicon Valley. 1.5 hours away is the closest. That's pretty crazy. I thought there'd be more in Silicon Valley, personally. Bros needs Palantir for that supply chain so they can expand to the Northeast, potentially. We'll see. Have you ever looked into SDOT or been to their restaurants? Let's check out. What is SDOT? SDOT Saduk Group. Kokomoto Hawaiian Poke, Superfit, Meal Prep, Muscle Maker Grill. I can't say that I have seen any of these. There's a few Hawaiian Bros restaurants here in Houston that have opened up as of late. Maybe it's part of the same group. Between your 11-year-old bulldog and your 1-year-old baby boy, I clean up a lot of poop. Happens, man. TT, baby. I miss Trinidad, man. Great people, beautiful people. Went Lyman. Yeah. Wish I brought back a wife, but that's a different story for a different day. Link in the chat. Ask Matt Money some questions. Yeah, man. Much appreciated, TJ. I wish I'd be able to hang out with you tomorrow. You need a bunker. I agree. Bunkers are something I think about as well. Laura, what a lot of ETFs probably use options for cover calls on your few large stock positions. Thanks for mentioning caution. Be careful. Yeah, I mean, TJ is a good person to chat with. I think the problem, though, with some people that I recognize. Hey, TJ, thank you for the $5 super chat, my guy. Much appreciated. I wish I could be hanging out with you guys tomorrow. The problem that I see with a lot of people writing cover calls, especially if they just like want a little bit of income, right? Just like, is that what ends up happening is, and this is when you kind of, TJ can help a lot with this. It's like, let's say for example, July of last year, the market went on a run. So Amazon went on a run, Google went on a run. I literally described this yesterday to a friend at lunch. So let me use this example. So in July of last year, the market went on a good jog. And with that jog, we went from May to July, and we went up about 10, 15%. in some stocks, maybe even more in terms of Google and Amazon. And so when you're writing cover calls, you might not be prepared to go on a big jog like this from May to July timeframe. That's a pretty big run up. And so some of these things got breached. And so these things, meaning these options. And so instead of buying them back and completely losing my ass on, I would roll out. And what rolling out does is keeps the ball in there. And, you might continue to go up, right? The single stocks would likely go up. But in terms of ETFs, they're generally such a broad market of funds. They always kind of come back 5-10% over time. And so, you keep rolling, you roll again. And even the whole thing that's beautiful about selling options is the theta associated with it. Theta is just that decay associated with time. And so when you have extrinsic value, in this case, let's say the stock price is 452 on the SPY, and I sell a 470, any premium that's on that 470 is completely extrinsic. There's literally nothing that if the stock were to, or the option were to expire at that time and place, that is technically intrinsic value, because everything is below the strike price. So in that case, every day we're below that strike price, you slowly lose more and more of that option premium because it's less and less likely to hit 470 to the point where it actually expires, where it would then be zero. Now, in case the stock continued to run up to the 470 time frame or 470 place, then might have some intrinsic value or whatever. But that's kind of the thought process: is you continue to write contract out in time, you let theta do its thing, time decay do its thing, and most of the time, even if you breach, if you just are cautious enough and you know what you're doing, the stock will likely retrace, or it'll stay flat or something like that. Or you could just, over months or whatever, be able to get yourself out of that opportunity and make yourself a profit and get yourself to a place where you can take profit and not lose any money. So that's what happened to me on Google, Amazon, S&P 500 in the June, July timeframe of last year. And I didn't get called away a single stock. And I actually made money doing that. I ended up making like 17 or 18 grand last year in covered call income. It's nowhere comparatively to what TJ made, but overall, for how conservative I was on my contracts, it was pretty good for me. I make sure I keep my golden geese. My stocks are my golden geese, and I don't ever want to let them go, because I am planning on making the majority of my money and my profit off of owning stocks, and the options income is something that I wanted to make sure is that just options income, nothing crazy. I don't want to lose dollars because I'm chasing pennies. And what I mean by that is, it's like, if I write, Amazon at the moment, let's just take this example here. And this is what I see a lot of people do. A lot of people will do something like this. Amazon, for example, is trading at 154, right? 3-month chart. Let's just look. And they might say, okay, this thing's overrun, my guys. Like, let's just sell. I think that this is going to do a complete 180. It's run so hot. It's up 56% over the past couple months. Let me sell it to 155, because they're like, if I sell it to 155, I can get $565 today. Next thing you know, the stock runs up to $165, and they're sitting there being like, oh my God, I'm underwater by, $4.35 for each of these contracts. Because I got 565 for my 155, but now it's at 165. I mean, there's $10 of intrinsic value on there. So this went to, 435 up. So $10 in terms of what the options price is by the time it gets to February timeframe. And they're stuck buying it back. So they buy back, they lose $400 a contract, and then they don't write again because they're like, I don't know what's going to happen. And next thing you know, they say, oh shit, I lost $400. I'm never doing this. This is stupid. I don't understand why anyone would write cover calls. Well, if you're looking at me, the contract price that I would look at is I look for 2 standard deviations away. This is how I do it. Doesn't necessarily mean you have to. So I want to guarantee the win for me. Like, TJ likes to manufacture the win. I like to guarantee my wins. I would be at the 180 strike. Hey, you're only getting paid $40 for the contract, but over time, very rarely will you actually get these shares called away. You know, maybe you can get a little bit more aggressive at the 175, 60 cents, 50% more in terms of premium. But I would probably hang out at this 180, 175, maybe, if I wanted to get a little bit more aggressive. And so if that's the case, very unlikely you're going to go from 155 to 175, but I could see a case where you go to 160, 165. Not too far away. You're within a standard deviation of being in here. So 60, 70% of the movement of the stock will be in there versus if I go to the 185 or 180, it's 2 standard deviations away. And I'm getting the standard deviations by this chance of profit or this delta that's kind of here. And it kind of coincides with like if you were to do a standard deviation away from the price, kind of like a Bollinger Band, but not really, but a standard deviation away from the price, like how likely is it to happen? Very unlikely am I going to get to the 180, 185. Probably like a 1 in 20 chance. And so it's like I'm almost guaranteed this 40 cents here. And worst case scenario, it gets to 185 and I just roll out, you know, another month or something like that. And it's very unlikely that it's going to roll out another 2 standard deviations. And that's not to say that I would. I'd find something that, you know, would get me my 40 cents back or the difference between if it, you know, but most likely what'll end up happening is it'll be at the 175 or closing in on the 180. And they'll be able to buy this back for way less than 40 cents. And that's kind of what ends up happening for me for covered calls. And I end up doing pretty well with that. And yeah, I'm not going to be making as much money as a TJ on my options income or anything like that. But when you have a big enough of a portfolio, I want to keep my golden geese. And 17 grand is pretty cool. That's a car payment. That's half of a mortgage for most people. So hell, I'll almost pay for half of my mortgage. Actually, it would probably pay for almost all my mortgage, but then taxes are pretty fucking expensive these days. So just some thoughts on that. Coin stock, I haven't done too much due diligence on that. Stay single. Yeah, I was actually thinking about this. I don't talk about women very often. You know, I've been single for the past 2-3 years, happily as well. I was dating a lot in 2021, but I've been kind of holding my way back. You know, just kind of minding my own business, focusing on my myself. And I was thinking on the drive in, I was just like, man, because there's been a few girls that have approached me, and I'm just like, no. Like after chatting with them a little bit, I'm just like, I'm okay. And it's like if I could just find a very sweet, nice chick who doesn't annoy the shit out of me, like is kind. They don't have to work. If they want to work, that's fine. I'm not going to force them to work. If they don't want to, though, and at the same time, I'm like, if they don't annoy me, and even if they're my girlfriend, I'll just take them to the range. I'll get them a Range Rover. They can drive their damn Range Rover. I'll be happy to do it as long as they don't annoy the shit out of me. And I would love to provide that for them. But most of the time, I'm like, you're not Range Rover. I'm not getting you one because you annoy the shit out of me. Anyway, said too much. So can't focus on the market as much as I want to either due to your job. That's something you got to focus on, my guy. Tech is where it's at for now. It might not be that way always. But for now, you work in mids and love doing working home during market hours. When 500 to SPY, I think 500 SPY in 2024 for sure, personally. Premiums are crumbs. Capital appreciation is the loaf. I concur 100%, my guy. Oh, what just happened? I clicked on something weird. Laura says bullish on coin through 24. They hold all the crypto stocks and coin tomorrow on the top positions at 15% each. 26 companies, so it moves. It was over 150% of the ETF run up. Marriage qualifications just don't annoy me. Yeah, pretty much. Don't annoy me, man. I provide a lot. You know, I got a nice house. I need to hang up these damn paintings and stuff behind me. They're not real paintings; they're canvases. But other than that, everything in the house is pretty good. You know, everything you got. You know, the fridge is full. I don't mind grocery shopping. I do my own laundry. So, but yeah, I'm just trying to think. I mean, everything's okay, other than I still have some boxes that I need to like throw away. They're empty. They're just like folded up. So I could either keep them or throw them away. I'll probably end up keeping them, just fold them, put them in the garage in case I need to use it again, in case I need to move for work or something like that. I'll keep the house, but rent it. But yeah, these damn paintings behind me. Every time I come into this room, I'm like, this weekend, I'm gonna hang these paintings. And then it gets to Sunday, and I'm like, I'm not hanging out. What is my most financially irresponsible expense? There's two things that I think about. I mean, I have my Tahoe, 2018 Tahoe, and that's probably it's less than 5% of my take home, but that's probably to most people um, too much money a month to be spending. It's actually probably less than 5% now, but it's probably too much money to be spending. And then I probably order out too much. I've been getting better about going grocery shopping. I don't know if that's just because I live in a house now. It's a lot easier to get groceries in and out of the house versus when I lived in the apartment. I lived on the 25th floor, and I had to like carry, not carry, but I would have to like cart in groceries. And that was a huge pain in the ass. So now I can go to the grocery store. I can literally pull into my own garage and unload directly from my garage into the garage. And one of the things I thought about when I had a house, I was like, it would be beautiful if I had a garage that was right next to my kitchen. So when I had to carry in groceries, I don't have to be carrying them upstairs because there's a lot of houses these days that have the kitchen on the second floor, and it's like the first floor is like a garage and like a bedroom, and then the second floor is like a kitchen, and I'm like, no, I would prefer my kitchen to be on the first floor as my entry. Um, and the upstairs is for bedrooms personally. So, but I can understand, like for example, my mother's getting if she wants to visit, and I told her I was like, I don't have any bedrooms on the first floor. I was like, I was like, I can put you up in a hotel, or we can move the couches, and I can go get a blow up bed. I was like, but probably unlikely. The stairs are pretty steep in the house, so I'm like, it might be tough for you to go up and down the stairs. So, there's pros and cons associated with it all. Um, let's see, Vegas craps table. Yeah, I got a lot. How much did I bring to gamble away? I think it was either 1,500 or 2,500. Not to mention, the drinks and stuff that I was buying. I didn't really consider that. That's just normal expensive being me. But money to gamble, I want to say it was 1,500, but it could have been 2,500 bucks. I don't really remember. It wasn't that bad. For a while I was down almost all of it. Actually, now that I think about it, I think it was closer to 2,500. But I was down quite a bit. And then towards like the last day, I kind of went on a run with craps. I think it was with you, TJ. And then immediately after that, I just like start getting belligerent again, and I lost it. Do all women not clean up after themselves, or just your wife? Oh no, I don't want to get involved in that conversation. Yeah, after that markets are running to election, I agree. I think this is going to be this is probably going to be the worst quarter. I saw that on CNBC as well. Condo was like that with the kitchen on the second floor. I hated it. I would too, right? Like, who wants to carry groceries and stuff upstairs? Wouldn't complain if someone wanted to clean up after you. I don't mind. I don't mind cooking, but cleaning up I'm bad at, and I don't mind doing laundry either. But folding laundry after it's done, I'm bad at. So heads up, I don't mind cooking. I don't mind picking up dishes and stuff like that. Actually, doing like pots and pans though, I'm not good with that. I end up letting them soak for way too long in the sink. And some people don't even believe in soaking, and I get it. I understand. It's me being lazy. I understand. But then like doing laundry, I'm good at doing laundry. I'm not good about folding laundry. So if you could invest in SpaceX, would you, and how big of a percentage of your portfolio? I would not invest in SpaceX. Reason being is Actually, that's a lie. So originally I bought into Google back in 2019, 2020 timeframe because they actually had an investment in SpaceX. And at the time, I didn't really fully understand this. Now that I'm 5 years older and more mature and understanding, a little bit more about businesses and understanding how to invest in companies that I align with in terms of purpose and stuff of the like, I would rather invest in a Rocket Lab than a SpaceX. Reason being is Rocket Lab, I think, is actually focused on profitability and has a little bit more focus. I honestly don't think Elon cares. I think that's not true. He cares about getting to Mars. And so when it comes to that, he'll lose money for as long as he needs to in order to get to Mars. So, to me, that's a scary company to invest in. And you might have made money now, but if it goes public, Starlink might make money. And so I could see myself investing in Starlink, but actually entirety of SpaceX, that would scare me a little bit. The thing that's different is I see Rocket Lab actually making profit in the future. And so they're focused on good gross margins. They're focused on, so it could just be that SpaceX is trying to just go balls to the wall, and maybe they're going to be hugely profitable in the future. 2022, they were not profitable. I think they had a quarter of profitability in 2023, but I'm not sure if they persisted with that. So for me, I'd rather own Rocket Lab. Rocket Lab is a $2.5 billion company. I could see it growing into being $100 billion company. So to me, I think that's a better opportunity. It's launched over 40 vehicles into space. It's got some great. I have a Seeking Alpha article that I'm hoping to get feedback on and hopefully publish here soon enough, where you guys can read my thesis on why I think Rocket Lab will go from a $5 stock today to a $15 stock by the end of 2025, so 3x or so. So we'll see what ends up happening. Hopefully that article comes out here pretty soon. Let me see if I got my feedback yet. No feedback. Submitted 11 hours ago. So we'll see what ends up happening with that. But I would rather invest in a Rocket Lab. And I think the thing that's beautiful about Rocket Lab, SpaceX has Starlink as kind of a secondary income source. But when you think about Rocket Lab, they have Solero, which is solar panels. They have trackers. They have rotation wheels. They have a bunch of different things that they can have. They create satellites from scratch. So to me, I would prefer to have that. They have a small launch vehicle and a medium launch vehicle, or will have a medium launch vehicle that'll compete with the Falcon 9 and be cheaper as well. It'll be 18 to 25% cheaper. Will also be reusable, 10 to 20 times reusable. It's kind of the thought process. And so to me, the upside associated with Rocket Lab is much better. And I have 6,800 shares at $5 a piece. So $35,000 in that. So less than 5% of the portfolio. I need to buy more. I want to get to 10,000 shares, so about 50 grand worth. My whole thought process is I think it's easily going to 5x from a $2.5 billion company to probably a $15 billion company. And if that's the case, and I have 50 grand in it, it's going to be $250,000. I think there's a path where it goes to 50 billion, and in that case, it 20x's. 2.5 billion to 5 or 50 billion. So that's a 20x. And if that happens, that'll turn $50,000 into $1 million. And in the case of which it goes to 100, then that's a 40x, and that would turn $50,000 into $2 million. Is it going to go to 50? Is it going to go to 100? I think it's too early to tell. But I can easily see it with the path that it's on right now. to 10 to 15 billion. So it's a 5x for me. And they're not really diluting the crap out of shareholders right now. I can see maybe they do in the future, but they're actually getting pretty close to profitability. And that's part of, with the money that they have at the moment, with the burn rate, I think that they could get there. Got Steve intrigued over Rocket Lab the other night after our pod. We will see what happens with that. You need a cardboard cutout to fold laundry. Yeah, I do. 40XR, there'll be a $120,000 position that scares you. I mean, you could always sell cover calls or get out of some of it. So, thoughts on Baba initiated position with 1,000 shares around 67.60. Selling calls lower your cost basis and your overall risk. I'm down. I used to have 200 some shares. I think I still have 178. Hold on. I'm not sharing my screen, right? Wrong. Here. Where is it? Okay, I guess I don't have it open anymore. I guess I closed it. I think I still have 178 shares, but I'm down huge. I think I bought 160 or 180. It's my cost basis, and that was from writing cover calls and stuff as well. I think my original cost basis was around 200. I think I've calculated my new cost basis around 160, 180. So your boy's down bad. And so I'm just writing cover calls. My thought process is eventually they're going to buy back enough stock, or to me, it's like one of those things where China either gets their shit together and the VIE, what is a variable interest entity, will either be worth something or it won't. And to me, it's like, what, 170? How much money do I have in it? I think it's 178 shares times $69. It's like 12 grand. So to me, I'm like, it's $12,000. It either, to me, it's like I'm okay taking that $12,000 bet that it might turn back into 50, 60 grand than trying to take that $12,000 and put it elsewhere. Although now that I think about it, maybe it's worthwhile for me to just take that 12 grand, buy the rest of my Rocket Lab shares. And because $12,000 would buy me about what, $3,000 worth? 12,000 divided by, let's just say it's 450. So 2,600, another 2,500 shares. So maybe that's what I end up doing, to be honest with you, is if Rocket Lab gets back down to 450. And that would get my cost basis back down, maybe even to the 4 range, 4, like below 5. In my individual brokerage account, because I think I'm at like 4 or 540. I think for my 6,000 shares in there, so that'd be cool. Their net income is similar to Amazon. That's what's crazy to you. I know, man, and they're actually doing a dividend now, 1% dividend or something like that. So dividends, buybacks, it's pretty cray-cray. But anyway, I'm going to call this one 10:15. We've done about an hour and 15 minutes. I just want to get you guys to be sure that you check out Cashflow Chronicles TV. That's where this replay will be going. Also, be sure to be on the lookout for Chris. And hopefully his wife is okay. Keep them in your thoughts. Really would appreciate if you guys went over to Cashflow Chronicles TV and subscribed. We're at 545 subscribers. The hope is we get to 1,000. And Hot Chris and I can move over there full time instead of being on the Matt Money channel. And the Matt Money channel can go back to strictly being Matt Money brand. And I might be able to do some independent Q&As like this and hang out and talk just like we normally would, on a say Saturday or Sunday or something like that. But the Cashflow Chronicles videos will be over there. Good vibes to Hot Chris and the wifey. And I'm going to get out of here. I have to go into the office tomorrow. I'm pretty upset about it. It'll be a great day. Great meetings that are going to happen tomorrow. But at the same time, I'd love to hang out on TJ's live stream. So be sure you guys, if you're home, to check those out. I'm going to go hop into Discord. If you guys are in Chris's Discord, reach out to me if you have any other questions. But I'll probably be in a buddy Discord just chatting with some friends. So you guys have a good night, and I will talk to you guys soon. All the best. Cheers. And Hot TJ, thank you again for the $5 super chat. Also, if any of you guys are interested in becoming members, don't feel obligated. There's a little money sign next to the chat box if you're on a desktop. feel free. I think there's like 10 or 11 of you guys, like Dean Pierce and a few other folks that are in the Money Yang as well. Don't feel obligated. But as always, we will see you next week. Expect on the Matt Money channel, this channel, to see me on Saturday, Sunday. Generally, we'll do a live stream just hanging out. And I'll see you guys then. Have a good one. And I'll catch you guys on Palantir Weekly if Amit has the opportunity to do so tomorrow. Talk to you guys soon.